Hello, and thank you for tuning in to another edition of the Vulcan Report. Today's report is for trading Monday, November the 25th. So this is trading for Monday, November the 25th. Taking a look here at the E-mini S&P 500 futures chart. Once again, we are noticing that this market has a lot of strength and bullish momentum, upside momentum built into it. So we have to continue to follow the trend, but trade lightly and be alert and aware that this thing could reverse at any moment. Because we don't know where the top is, however, we have to be mindful of it, but still be prepared to make moves. You see here that the bullish momentum in the market is still strong. All right, we're still aware of where we are. We're locked in on bullish momentum, and at this stage of the game, we have to continue to follow the trend. Now, we had these warning bars a few trading sessions ago that we talked about, and now we finished the correction, and now we're starting to go back up. The only thing that we need to talk about, though, is that price is rising during a downtrend channel in the swing VIX. So we have a divergence here between price and the indicator, which means that either the market is going to start to head south and trade in line with the indicator, or because the indicator leads the market 3 to 5 days out, perhaps it's finished running its course now and wants to turn upward, and then price will have to follow. So we expect the next bar, if all things being equal, on Monday's after Monday's close, the next bar, instead of being red, should be blue to indicate an uptrend channel, the beginning of an uptrend channel, like we did here, like we did on November the 11th. Okay, so that's what I'm looking to see what happens. Technically, on November the 8th, we had a nice surge, a rally that day, and then the following day we began the beginning of locking in bullishness momentum, and we developed an uptrend channel. Okay, I'm predicting the next thing is going to happen on Monday too. We just get follow through and we continue to roll out to the upside. So we have to watch, be mindful, be careful. The ranges, the intraday support and resistance ranges are narrowing in. So either we're going to get an explosion, an upside explosion, or we could get another downside correction. So keep that in mind. We're still technically at a crossroads. All right. Seems like every day is a new contract high. All right. That's kind of a dangerous sign. We just need to be mindful of where we are and be quick and nimble to take profits and to reverse if necessary. So without further ado, tight range on Monday. It is what it is. If you're long, holding a long position from last week, maybe even Friday, then you're looking to get long at 11.08 3/4. Okay, on the short side, you're looking to get short at 17.97 3/4. So that's your breakout and breakdown price triggers for Monday for the E-mini S&P 500 futures contract. All right, let's take a quick peek at the Nasdaq. The Nasdaq is a different story because it's not locked in, and we have a sideways signal, meaning that as far as momentum is concerned, the market is completely sideways. We have no negative or positive momentum. We have no positive or negative momentum in the bullish configuration. So lack of locking in bullishness, and we're technically consolidated within the volatility bands. This means that we expect sideways to lower prices within the next 3 to 5 days. We have to watch and wait and see, but it does look like the Nasdaq is topped out for now. So for Monday's trading, we have long at 34.23 3/4, short at 34.11 and a quarter for the Nasdaq futures. All right, looking at the crude oil futures chart now, we do have an uptrend channel, just like I told you a few days ago. That looks like we were basing out, and the market was getting ready to switch in its behavior, and that's pretty much what happened. Market based out, held the support held, and now we're blasting off to the upside. Don't know how much more power we have in this, but we're still in a bear market. We're still in a downtrend, but we have ceased going down for now. We've now re-entered the volatility bands. Enormous trading range within the volatility bands. So I'm expecting that to really narrow out in the next couple of days. Because right now we have top side at 110 and bottom side here at 92.37. What that normally means is that we expect for the volatility to simmer down over the next couple of days because of the holidays, and then this will come back into alignment. Let me break it down what this means with the volatility bands. These volatility bands represent trend line for the entire trend in the particular market. Technically speaking, okay, this bear market in crude oil is so strong and so powerful. As of Friday's close, this market can rally from $94 a barrel all the way up to $109 a barrel and still technically can be considered a bear market, or at best a very weak new bull market. Okay, this black line represents the resistance for this downtrend bear market. Okay, even though it's above the Kumo cloud a little bit, it's showing you where this market, what it could do. It could look bullish for a minute, try to turn bullish, hit this resistance and fall right back down again. So until you get above this downtrend is not over. Technically speaking, until you get above this 109, 110 level, this downtrend is not over with. So you could rally and still be in a bear market. So this market has a long way to go before we even consider a trend change here. A lot can happen though that could change that, but as of right now, Friday's close, this is where we are in the crude oil. All right, and because we've been trading in narrow ranges, we expect that to continue. All right, we have an uptrend channel. We have price trying to keep in line with the uptrend channel. We'll see if we're setting up for a nice little bull run, or if we're setting up for another leg down. You never know. Again, the call that we had, our initial target, I did tell you that I thought that the $88 to $87 price range was a strong support, but that we had another strong support at $77 a barrel. So anywhere from the $88 to $77 a barrel, that's a $10 range of support, major support for the crude oil. That is still in play because we're still in a bear market and we have been moving down. The only thing is we have this nice strong base here at this $92 range that we cannot ignore. Okay, very strong base. Will it hold, or will we now start to get back up to this level here at the $100, above the $101 a barrel? That's the true test of this retracement. Is enough bears going to start taking profit to push prices higher, thus causing bulls to start piling on a little bit? We'll see. So this one we're going to watch and see. All right, for Monday's trading in the crude oil, short at 94.81, long at 95.64. All right, the next chart is the Dow futures. Everyone's screaming Dow 20,000. Who knows? We take it one day at a time. Right now, we just broke Dow 16,000 for the first time in trading history. Nice locked in bullish momentum. All right, stretching that overbought. We did get a warning here on the 19th, barely even a correction. Took off again, off to the races again. Excuse me. So, with that said, we need to be mindful now of what's going on, right? So here we have it. What I see happening in the Dow at this point of the game is we could still blast off a lot higher. The top isn't in yet. It just isn't. Does that mean we can't get corrections along the way? Some intraday nice little short selling? Of course we can. So we gotta watch it. All right. Here's what we got for trading on Monday. For Monday, November the 25th, this is what we got. We got long at 1647, short at 15995 for the Dow. All right, here's that Russell futures now. You can't count the Russell out, can you? We've been trading sideways within the volatility bands here. Okay, wide trading range, but then all of a sudden we explode higher during a downtrend channel on your swing VIX. All right, and now it's trying to get above this resistance here. Can we do it? We're pretty much knocking at the door. 1124.10 is going to be your resistance area here, and that's not far away. It's like a point away, basically, and it could probably hit that easily on Monday without any problem. But we got to be mindful of what this market may do. So just in case we do top out in the Russell, it looks like the Russell and the Nasdaq are the weakest because they're not locked in with momentum. But one thing of note is that the Russell is attempting to lock in momentum as of Friday's close. It's trying to start a new bullish phase like it did here back on the 14th. And it did hit new highs before collapsing. So let's see what happens. Monday's trading. Long at 1125.90. Short at 1120.90 for the Russell. All right, looking at gold. Looks like 1150 is in play. I did warn about that. All right, we just have to wait and see. We could try to form a nice little support here at the 1230 level. So be mindful. We are now officially negative pulse waving. We closed below the trend line support, and we're now starting a new lower leg. All right, barring some event or something, I don't really see this market correcting just yet. To the upside. Anything's possible, but I just don't see it yet. But we'll still trade lightly here. All right, we have new locked in negative momentum. Short sellers keep re-entering this market. All right, so for Monday's trading, what do? Long at 1244.20, short at 1235.90. Very tight trading range. Okay, our last chart now is silver. $18 is the support, the July support for the silver, and the initial 1950 support that I told you about. We're pretty much there, so keep that in mind. But the selling's not over. We're still locked in. You see the red line here. We're still locked in on the on the bearish momentum to the downside. Okay. This is a new pulse wave. We're trading below the trendline support area here, and this is a new pulse wave. Where it stops, who knows? But we have no idea. We just have to keep going and see what happens here. So again, you're holding those shorts. That's what I see happening here. People are still holding shorts. I don't see really any evidence or signs of people adding shorts. I don't see new shorts entering the market just yet like they did back on November the 7th. All right, we'll have to wait and see. But right now, I will say that if you're short, you can pretty much stay short and trail that stop. You may want to consider putting your stop at around maybe 2050. That should pretty much hold. But I do see new leg downs, new lows coming the week of Thanksgiving. All right, so once again, I don't really have a new recommendation on the silver, except for holding shorts. If you were going to throw something at it, I would say Anything below 1985, you would try to trail your stop. On Monday's close, if it closes well below the 1985, then I would move that stop from 2050 down to 1985. Okay. If we gap down on Monday or something and we start to see signs of reversal, 1985 will be where you would liquidate shorts and take a short-term long position, putting your stop right below Monday's low. Okay, so that's how I would do for the silver. One final note: remember that it's the holiday week, so the markets, the last day of trading is going to be Wednesday. Wednesday will be a normal day for the most part. Thursday, Thanksgiving Day, the markets will be closed, and on Friday the markets will reopen but trade on a holiday schedule. Most markets will be closed that morning, so just keep a note of that. If you have any questions, go to the CME website, Chicago Mercantile Exchange website, and they will have more information under the holiday calendar tab. All right, and that will let you know as far as your futures exchanges and how that's going to work. All right, remember, take what you can and give nothing back.